Welcome to Business Engineering, and thank you for joining us. This is the second presentation in our Basics of Business series. This presentation furthers the high-level understanding of business by exploring what is a corporation. Let's check it out. Business engineering tackles complex management, technology, and business topics. We are unique in that we provide analysis and meaning by leveraging executive experience, evidence-based research, and doctoral-level academics to give you working knowledge to improve your business. The key points we will explore are: what is a corporation? Why do they exist? What is their purpose? What are their benefits? When did they first appear? And how are corporations created? Let's start by exploring and understanding the definition of a corporation. A corporation is a form of association or organization of persons and material resources chartered by their respective state or nation for the purpose of conducting business. They are acting under a law or a legal construct as a single entity, having a continuous existence, and they hold powers and liabilities separate and distinct from their members. Let's consider the background and evolution of corporations. In medieval times, businesses were typically owned by a proprietor or families, and sometimes partners. To structure and clarify partnerships, verbal agreements, and even formal written agreements were known to be constructed to define the partnership, roles, shares, and the liabilities of each partner. Unfortunately, there was no law or standard to govern this practice. Beginning in the 1300s, the practice of establishing and chartering companies emerged to facilitate large endeavors for the public good. These larger endeavors were for building and operating such things as hospitals, universities, bridges, roadways, and the like. The company charter could be revoked by the government if the charter was not being properly fulfilled. During this period, an early form of corporations known as joint stock companies emerged. Since the 1600s, corporation evolved from its predecessor of a joint stock company. Formal corporations emerged in Europe to support trade, simplify taxation, and support colonial expansion. The first recorded multinational corporation was that of the East India Company in about 1605. After U.S. independence, American companies were chartered as corporations for public works, and in the mid-1800s, several laws changed which caused corporations to flourish. Notably, in 1844 Britain, corporations were allowed to define their own purpose. In 1855, corporations were afforded limited liability for their shareholders. And in 1886, U.S. corporations became the equivalent of a natural person under law. So what is the purpose of a corporation? Why do corporations exist? One answer is, as compared to a sole proprietorship or partnership, a corporation is a flexible instrument for large-scale economic activity, especially for raising large sums of investment capital. To serve this purpose, corporations can enable, organize, and capitalize a large undertaking by establishing a clear charter to give clarity as to their purpose, limits, and scope. They centralize authority so that the purchasing entity, such as a hospital authority, does not have to deal with many vendors. They deal with one corporation who manages the suppliers and vendors. They can raise capital in a centralized fashion from many investors. They can protect those investors from liability. They can gain benefit from the economy of scale, and they offer stability beyond that of an individual proprietor. There are various types of business ownership. This list identifies those that are not corporations, 5 common types of corporations, and a few less common types of corporations. These ownership structures are covered in the next episode, entitled 6 Types of Business Ownership, where we explore the characteristics, features, benefits, and drawbacks of each type. Let's take a look at the features, benefits, and characteristics of corporations. The general features of a corporation are that corporations enjoy most rights and responsibilities of individuals. The corporation has indefinite duration. The owners hold varied portions of ownership or shares. The owners or shareholders hold voting rights proportionate with their shares. The ownership shares are transferable. Corporations offer their shareholders limited liability, and most corporations, but not all, have a profit motive. Let's look at these points one by one. A corporation is a legal entity that is separate and distinct from its owners. Corporations enjoy most of the rights and responsibilities that a single individual would possess. Corporations are allowed to own assets, earn income, borrow money from financial institutions or the bond market, sue and be sued, and are required to remit federal, state, local, and in some cases, special taxes. One distinct difference between a corporation and an individual is the concept of indefinite duration. When an individual dies, so does all of its legal existence. Corporations do not have this limitation. Corporations may be structured for indefinite duration with no foreseeable end to the corporate entity doesn't close when an owner dies, and ownership may transfer hands many times in many years. Shareholder ownership. One or many individuals can hold ownership in a corporation. A corporation may be structured as a form of fractional ownership, where a share, or stock, is one proportion of the total of the shares held by all owners. In most cases, public owners may hold few or many shares, in some cases up to 51%, where some corporations employ restrictions as to not have too much power under singular control. Shares are transferable. They can be bought and sold privately or on a stock exchange. And an owner's span of control or voting rights is directly proportionate with the number of shares held by that owner. An important element of a corporation is limited liability, which means that the shareholders may take part in the profits of the corporation through distributed dividends and stock appreciation or share price growth, but are not personally liable for the company's debts. Shareholders are only responsible for the payment of their shares, and their liability limit is that the shareholder may lose their entire investment. Different types of corporations have different types of tax benefits and tax drawbacks. A significant tax benefit of a LLC or LLP over sole proprietorship or general partnership is that all business expenses are deductible prior to the profit line. Another LLC, PLC, and smaller S corporation benefit is that the profit from the corporation passes through directly to the individual's return, alleviating the need for a corporate tax return, and the tax is paid at the individual's tax rate. A major tax drawback is that some types of corporations, such as a C corporation and larger S corporations, are double taxed, meaning they pay corporate tax on their profits, and when those profits are distributed as dividends to the shareholders, the same profit is taxed a second time on the individual's tax return. While forming large corporations are a very complex undertaking, small corporations are quite easy to form and are done every day. The key steps to start a corporation include, first, defining the business. What is the vision, mission, charter, any bylaws, operating agreements, and the like that the business will operate under? Second, check availability of names and select a corporate name that fits the business. Third, select a jurisdiction for the incorporation. What country and or what state will it be incorporated in and operate under those laws? Next, depending upon the jurisdiction, select a particular corporation type and tax type. Identify your corporate directors, draft a shareholder agreement, and issue the initial round of stock. In many cases, select a registering agent, and that agent will file the articles of incorporation. Obtain the necessary employment identification numbers, tax IDs, any permits and licenses. Establish the infrastructure, such as a physical address, bank accounts, phone numbers, websites, email, and a way to maintain records. Finally, operate and have fun. This presentation has covered the research questions of what is a corporation? Why do they exist? What is their purpose? What are their benefits? When did they first appear? And how are corporations created? The evidence shows that corporations have generally been a beneficial structure in developed nations for small and large-scale business operations. They offer substantial operational, security, and tax advantages to all involved stakeholders. Forming a corporation takes careful planning, yet for small business it is relatively easy and there are a lot of resources available for help. We hope you have enjoyed our content. Please let us know. Your comments and suggestions for additional topics are very welcome. Thank you.